Hi, and welcome to this morning's concise highlight. It is Friday, January 8th at 6:30 a.m. And we're coming to you a bit earlier than we have of late because this is going to be very concise indeed. A quick run through on the S&P, which is leading the rest of the equities markets. And then we are going to jump through mention only of the other markets, which are still very consistent in terms of their technical structure with our last global view, full video analysis and write-up of the technical projections back on Tuesday for the video, with the technicals being added Wednesday morning. And that is, in spite of the recent market moves, those levels are relevant because the Chinese market is stabilized now, with the Shanghai Composite, as bad as it acted over the last week, holding without hitting circuit breaker levels down at 3,056, in other words, near the old 3,000 support, and finishing at 3,186. And we'll see what that has meant to the U.S. markets, but you can imagine they're a bit firmer on the back of that. And on the other hand, the fundamental overall situation in news remains on the weak side. So, what does all this mean to the markets? And we can start by telling you that the S&P 500, after a couple of pretty bad days and starting the week bad to begin with, is up at 1947. And that's kind of important because it already traded up to 1960 electronically overnight when the Chinese rebound came in today. And 1960 is, of course, a pretty important area on historic congestion. As we noted yesterday in a short-term alert we sent out, the 1960 area was where the market opened below, cleaned out above it on a squeeze, but never got back to Wednesday's low at 1971.5. So we still have a gap lower on the daily chart, and it also, both early, actually before this opening, had gotten down near 1930, the next support electronically, and after it failed on the morning bounce, got back near it late in the day. Now, what's important this morning is that the short-term downward channel is in around the 1950 area, and that remains important. Now, it's a very aggressive channel, and you can see that as we get out into after lunch today, this is going to be down around 1930. So the question is, where the bears maintain control of the market and don't let the market break up at all, which means that by shortly after lunchtime today, we might be below 1930, which is the other lower key historic congestion, below which the more major supports start to kick in at 1900 and into the upper to mid 1800s. If we break out of this channel to the upside, you still have to keep an eye on 1960, which was reinforced by yesterday's activity, and of course the 1970 to 75 area, which will be very important on whether it can be exceeded to fully recover back above that old major congestion that's been a key area below which the market has destabilized in the near term, both back in August and again in September. And that pretty much does it for the short-term view of the S&P 500.